M.S Unnikrishnan, MD and CEO Thermax, joins in with a better sense of their business plans. Mr. Unnikrishnan, it's great to have you on the show. You know, we were just talking about DMart and how compelling that growth story has been for investors in terms of the compounding returns the stock has given. Would you say that your growth story and what you're forecasting is also a real reflection of how the investment cycle will be picking up that would cheer investors across the board?
Well, both are two different stories. Theirs is a recent story. We have one company which has grown 10x in 10 years. Between 2000 to 2010, Thermax has grown from a 500 crore company to 5,000 crores. So we have got something to depend upon what you've delivered earlier. And then we have seen some major negatives in the Indian market for the past maybe 5 years for capital goods companies. We've taken some strategic moves related to moving out of India substantially and taking Thermax from an Indian company into a global organization. We've invested substantially in terms of creating capacity both in greenfield and M&A outside the country. And we've got a very clear-cut plan of taking the project business of the company, which is more India dependent. And we are branching out into chemicals in a larger way. So multiple stories are behind that. So it is a workable thing. In that, one part of the story will certainly depend upon the investment cycle taking on a positive tide in the country. And a good part of that growth should come from India, apart from our international growth story. So that's the entire idea behind the 4x growth plan. So we have delivered 10x earlier. So delivering a 4x should be practical, is my conclusion on this.
Right. You, of course, sound very optimistic and have highlighted that annual sales target of 16,000 crores by FY28. That's a 14% compound annual growth rate over the next 10 years is very much on the cards. What gives you the conviction for order inflow to be as robust? Because, Mr. Unnikrishnan, you would appreciate, your business is cyclical. And, there are a fair amount of execution risks. But you're saying that accounting for all those execution risks and policy changes that may come by, if we had the same government or another one, that you would be able to ride out waves with that growth number of 14%?
First and foremost, we have got three different types of businesses. Number one is a project business, which is almost equivalent to maybe a 50 to 70%, depending upon which year are you talking about, which will certainly depend upon government policies, commodity capacity expansion in steel, cement, power, equivalent to that. But we also got standard product business of the company, which directly contributes into the consumer-facing industry like food processing, textiles, alcohol, beverages, auto ancillaries. Those are totally detached from the governance of the country. And third is the service business of the company, which is based on our existing installations. Now, the first one will always depend upon government policies, and the second and third will totally be detached from the government policies. So of the governance change that is going to be happening in the country, which I'm not expecting any change is going to happen, but in any case, one geopolity plus couple of more geopolitics we are now going to be depending upon. One of the things that we have faced in the last maybe 5-year period of time is that a good part of our business was dependent upon Indian economy, and we had suffered in the bargain. However, in the past 4 to 5 years, we have also taken enough and more actions to spread our tentacles outside the country. And our growth prospects are not only dependent upon India. We are looking at Southeast Asia, Middle East, Africa, South America, and Eastern Europe. All these sectors, all the geographical location which I mentioned about, will be needing to expand the energy capacity. I'm talking about the power energy, I'm talking about the conventional energy needed for running factories in heating, in cooling, captive power, which Thermax is fairly well known for. Similarly, water, wastewater, and air pollution control. So depending upon the investment that is going to be prevailing in these parts of the world, beyond India, we have created our market expectation, and we are investing in that, and I'm very confident about that. Irrespective of what may happen to India alone, Thermax should have a consistent growth in the product and service businesses. I'll certainly be dependent upon the investment cycle of the country for the larger projects, as I mentioned earlier, which can take a yo-yo. Once in a while it will grow in a substantial way, it can also come down later. But smoothening of the top line of the company with an averaging, which I mentioned about, to reach up to a 4x size is practical for us to do, since we are number one into multiple segments of business, and second is multiple geographies put together. So that is what gives us a lot of confidence based on the plan that we made and approved by the board to go ahead and do that.
Just an extension of that, considering your current share of exports is at 40% and you do plan to raise it to 60%, what kind of growth are you penciling in for exports in particular?
Yeah, let me correct the numbers.
Sure.
Our exports plus international income from our subsidiaries outside India is touched almost equal to 33%. Our order intake in the last year was 43% from outside India. So with that orders on hand and the moves that you are making, 33 should go to a 40% in the next 4-year period of time, and that 40 should cross 50%, where we will truly be a global organization in the 10-year time period which I mentioned about. So we'll be more outside India than in India in the 10-year time frame, which is factored in the forex growth for the company going forward.
Okay, you're pretty optimistic about the inquiry pipeline as well for standard products, as we understand. Tell us a little bit more about the nature and quantum of orders received so far.
In the current year's number, I shouldn't be indicating, but to tell you, the consumer-facing industry where I'm selling the standard products of the company, the inquiry inflow has gone up by almost a double digit. 10 to 12% is increase in the inquiry intake. And despite what all negatives could have happened in the Q3 and Q4, I am seeing an improvement in order conclusion in the first 2 months of the current year. If the trend were to be continuing, the standard products orders of the company normally varies between 400 to 500, 600 crore every quarter, which I am expecting a growth of double-digit percentage in the current year from India itself. You yourself are currently talking about the automobile industry showing a growth of maybe 40 and odd % in maybe in the last 2 months. They need extra capacity to be created. So each one of them, not only auto, I'm talking about even tire manufacturers, and then the root of support for that is the carbon black industry. Each one of them are expanding the capacity. We have recently concluded orders with virtually every tire maker of the country for expansion of capacity for boilers and heaters. So those orders are continuing. Pharma is looking up to again expanding the capacity despite all the negatives that they may be facing in the global market. Most of them are wanting to increase the capacity. I am seeing selectively textile industry investing in capacity creation. So light engineering is investing. So the ones which are not related to infrastructure building of the country, or maybe ferrous, non-ferrous metal, those are possibly still waiting for government support, interest rates, IRR. But others are on a consumption backup, and consumption is increasing in the country. So I have a role to play in that, but that industry should grow, and I should also grow along with them.
Mr. Unnikrishnan, we wish you the very best. You have a strong plan in place, and we hope your execution takes shape as per the blueprint that you've laid out. Thanks very much for joining us.